Indian economy headed? Ever since the pandemic, many have pointed out that India's GDP has been hit far worse than other countries in the region. Is the worst now over? And as Vijay Mallya's legal options narrow in the UK, what is the status of other non-performing assets in Indian banks? Let's listen to Dinesh Khara, Chairman SBI, in conversation with CNBC TV18's Shereen Bhan.
Hello and welcome to the HT Summit. It gives me great pleasure to invite for this virtual conversation the man who's heading India's largest bank, State Bank of India, Dinesh Khara, who's been at the helm of affairs at State Bank of India for barely a month, a little over a month now. So Mr. Khara, many thanks for joining us here at the HT Summit. Let me start by asking you that. It's been a little over a month since you took over from Mr. Dinesh Khara. Of course, you're a SBI veteran, sir, but this is quite the trial by fire. What's this month brought you so far?
Thank you, Shereen. First of all, for having me on this show. Well, of course, I think it has been quite an interesting scenario till now. And the fact of the matter is that I was part of the top management team for the last about 4 years. So, but now, of course, the additional aspect is that the buck stops at me. So I think that is a major change as compared to what it used to be in the past. There we had some kind of a collaborative process, though we still have the collaborative process, but nevertheless, the buck stops at me now. So that is a change.
Well, that is a change, and it's a big change. The buck stops with you for India's largest bank. Mr. Khara, let me start by asking you about what you make of the macros. We're awaiting the GDP print for tomorrow. The expectation is that the contraction will be nowhere close to what it was in Q1, which was at almost 24%. The CNBC TV18 poll is expecting a contraction of a little over 8%. We've seen a slew of upgrades coming in from a bunch of brokerages. What's your own pulse check on the state of the economy today in terms of demand, in terms of revival and recovery?
I think the second quarter has seen a significant improvement in the activity level. And I would correlate it with the unlock situations happening in various towns and cities in the country. And I would say that as and when and wherever we have seen the unlock happening, we have seen the demand revival, and demand revival itself has kick-started the economy. And that is something, one of the reasons why all of us are expecting a significantly lower contraction as at the end of the second quarter. And I hope, hopefully it sustains also. And if it sustains, then perhaps year-end would look much better than what it was envisaged.
Mm-hmm. So what's the number that you're going with in terms of contraction for Q2 and for the full year? The RBI's forecast or estimate was 9.5% contraction. Do you believe that it will be better than that?
My expectation is it should be between 8 and 9.
Between 8 and 9. One of the big things that's emerged in the banking landscape over the last few days is that internal working group recommendation that's coming from the RBI on bank ownership, Mr. Khara. As the man who is at the helm of State Bank of India, what do you make of that? Many former governors, deputy governors of the RBI have questioned not just the timing of the recommendations, but also the fact that allowing conglomerates into banking, they believe, is a bad idea. What's your thought on that?
No, I think agnostic to the ownership, much of it depends upon the corporate governance. So I think whether public or private, whatever it may be, the ownership structure, the most important in banking system is the corporate governance and also the related party transactions and exposure limits. So essentially, I think so long as these things are enforced either through regulation or through oversight mechanism, the banking system should not have much of issues. So I think what they're apprehending, perhaps, if at all there would be some kind of a slackness in the regulation, there could be some kind of a slackness in oversight, there could be perils for the system as a whole. But to my mind, I think over the period of time, the regulation has become quite strict. Maybe, in fact, what has been proposed also in this internal working group recommendation is that they have suggested a whole lot of amendments to the Banking Regulation Act, And those amendments are also intended with the same in mind to ensure that there are adequate oversight mechanisms in place before it is actually brought in. So I think, to my mind, essentially, so long as the corporate governance is tight and regulations are strict, ownership structure does not really matter much.
Okay, you're saying that ownership structure doesn't matter as long as regulation is tight. But Mr. Khara, we've had tight regulation and we've ostensibly also had oversight mechanisms in place, but yet we've seen a Yes Bank, yet we're now seeing an LVB, yet we've seen a DHFL. So that's the argument that people are bringing forth against corporate ownership of banks. Don't you believe that there is merit to that? Or the concern is legitimate?
The issue involved is that when the regulations are there, and also when the law is in place, very important aspect is how it is being implemented by the management also. As I mentioned about the corporate governance might not have been up to the mark, and that is why it led to this kind of a situation. So I think it is more of a oversight and implementation of the law, and also some bit of a conscience on the part of the board and the corporate governance structure which were there in these banks also.
Okay, let me ask you what you make of the recent events that we've seen. I mean, State Bank of India, not you personally, but State Bank of India played a part in rescuing Yes Bank. We've now seen the Reserve Bank play a role in trying to rescue Lakshmi Vilas Bank by the amalgamation scheme with DBS Bank. To your mind, as you look ahead, given the kind of situation that we see in Indian banking, the fear of perhaps laxity as far as corporate governance are concerned in select or specific banks, as well as the kind of threat of non-performing assets, do you believe that we could perhaps see more LVBs and Yes Banks?
I think increasingly system is maturing, and I think the learnings which are there in the system, they are being very critically looked into, not only by the regulator but even by the managements also. So I think that is something which will really help in avoiding the recurrence of such events going forward.
Okay, I know you'll find it hard to say anything more than that, but let me ask you about the health of the banking system. Because at the start of the COVID pandemic, given the kind of lockdown that we saw in India, the fear was that we would see, in the words of the former RBI Governor Raghuram Rajan, an avalanche of non-performing assets. And that pretty much has been the projection, whether you look at the baseline scenario outlined by the Reserve Bank of India or the worst case scenario outlined by the State Bank, by the Reserve Bank of India. But that doesn't seem to have come through if you see the results that have been posted by banks like yours. Do you believe that the fear of NPAs today is perhaps overstated? Is the worst behind us?
See, I would like to draw your attention in the context of State Bank of India. In our case, when it comes to corporate book, we have already provided about 88% of the corporate book. So that is, to that extent, whatever stress we had seen in this corporate book, we have already provided for. So whatever else is left out, we believe in providing upfront as compared to providing post the event. So I think these are some of the positives which are there with us. And also at the same time, in the intervening, the kind of regulations which have come in terms of the insolvency law in the country, which was almost a fiction, that losing control on the enterprise was almost a fiction in the past before the insolvency law came into existence. People have seen that it has become a reality also. So I think it has actually brought in some amount of a discipline among the corporates as well. So there's a conscious effort on the part of corporates to ensure that their account remains in order. And also, if at all there are some mishaps which are there is an effort on the part of corporate to repair the situation as against waiting for the account to go bad. So I think that is perhaps, these are the reasons. And also when it comes to COVID-related stress, as we have seen at the macro level also, the impact is not as severe as it was expected at the very beginning of the COVID. And we have seen that during the course of the COVID, things have started improving even at a faster pace. So that is the other contributing reasons that perhaps we have not seen as much of stress as it was envisaged at the very beginning.
So let me then ask you a follow-up question, because we've seen the Reserve Bank put out a restructuring scheme. We've today got the guidelines being announced by the government as far as the credit guarantee scheme 2.0 is concerned, to take into consideration the recommendations that were made by the KV Kamath committee. And now that scheme is open to the 26 stress sectors identified by the Kamath panel. But on the restructuring, what we've heard from banks like yours and others is that there have been no takers so far. So what is the conclusion that we should draw from that? That there isn't pain in the economy, or that the scheme is not attractive enough, or banks are hesitant to actually provide for these restructurings, and hence not pushing it as aggressively as you should?
I think it would be in the interest of banks and also the borrowers also to avail of any such opportunity which has been extended by the regulator and also by the government in terms of the scheme. So I think the reason perhaps why we have not seen as much of offtake of these facilities is perhaps, people are waiting for they are actually evaluating that if at all, or maybe if I may say so, they're not resorting to these schemes and these reliefs as the first recourse. There are others trying to see that if at all they can navigate the difficulties on their own, they would try to do that. And when it is all beyond them, then perhaps they will be coming forth. And this is the trend which we have seen in our book also. And whatever traction we have seen in the recent past, that is essentially for all such accounts, wherever they could not find any other option to get out of this situation. So I think eventually, if at all, people will not be left out with any other option, they will certainly resort to it. But it may be, this process might go on till March of 21.
Okay, so far, are you getting a sense that there will be takers, or do you believe that perhaps closer to March is when you will be able to see the real picture in terms of people wanting to avail of this scheme?
No, actually, we are proactively reaching out to all such kind of corporates where we are witnessing that they have got challenge in terms of their cash flows, etc. And they are very consciously evaluating these schemes, and will wait for the material time whenever they would like to avail it. We are very much there to support them.
Okay. What about the MSME universe, Mr. Khara? The credit guarantee scheme, as I pointed out, is now accessible to the 26 sectors that were identified by the Kamath committee as possible stress sectors. What's the feedback that you're getting from the MSME universe in how they've now been able to deal with the unlock, and are they in a much better shape today than they were?
I would say that post-COVID, every day, or maybe during the course of the COVID post-unlock, every day is a new day. And the way the economic activity revival is happening, it is actually giving hopes to many. So I think to that extent, the evaluation matrix has actually is undergoing a change when it comes to corporate also. So in that overall context, I would like to mention that maybe I think each one of them will wait for the sustainability of the demand revival, and perhaps then they will be depending upon what is the likely level of demand and how much activity will be generated. That actually will be the guiding principle for each one of such stress accounts.
Okay, so on balance, given everything that you currently have visibility on, as well as the feelers that you're getting on the road ahead, what do you believe will be the total bank loan size that could be restructured? I'm looking at an S&P report from earlier this week, and S&P says that 3 to 8% of total banking loans may be restructured. What's your own take? What's your own assessment, given the visibility that you currently have?
As I mentioned that, every day is a new day over here now. It is no more the past is no more a guiding trend. So for the future to come. So I think that we'll have to perhaps wait and watch for some more time to have a very clear visibility of the likely book which will undergo these kind of relief measures.
Okay, so still wait and watch. But is it going to continue to be wait and watch even as far as private investment is concerned? You know, the government has announced a slew of schemes. There is a great emphasis and a push on production-linked incentive schemes and so on and so forth to drive manufacturing. Infrastructure spending is something that the government wants to focus on to try and revive growth. At this point in time, do you foresee a revival at all as far as private investment is concerned? Do you believe that we're closer to seeing a pickup there?
Actually, in this context, I would like to draw your attention to the fact that the capacity utilization was somewhere around 69 to 70%. And we also saw the working capital limits utilization had also come down significantly during the COVID period. So the one positive trend which we can perhaps look at it is that post the September quarter, since there was a definite revival of demand, so it led to a situation where the piled up inventory had started coming down for the corporates and also the SMEs. So that has led to a situation where we expect that the utilization of the credit limits, working capital limits will start improving, at least in this quarter. That is one. Secondly, when it comes to investment demand, capacity utilization being at around 69-70%, the capacity expecting investment demand to come in such a short term looks to be little unusual. But yes, nevertheless, the steps which have been taken by the government in terms of encouraging the production and also encouraging the defense sector, manufacturing, etc. This will have its impact. People will start evaluating these decisions, and at least investment decisions will be seen on the drawing board, and perhaps it will lead to a positive demand. It may be in 3 to 6 months from now, but yes, of course, it will certainly create an environment in which people will at least start evaluating such decisions.
Okay, so that's still 3 to 6 months away. Possibly, we might see some signs of investment demand picking up. But Mr. Khara, you know, one of the sectors that's been beaten down very significantly is the real estate sector, with the home loan rates at multi-year lows, as well as governments moving on things like stamp duty cuts, etc. How confident do you feel of a revival? What are your channel checks telling you in terms of where we could possibly be on the cusp of revival as far as the housing sector is concerned?
Well, as far as we in State Bank of India were looking at a very robust demand when it comes to our mortgage loans. We have seen an increase of about 20% increase in sanctions on a YOY basis as on September 20. And even the disbursements also, there's always a lag between the sanction and the disbursement. Even the disbursements also went up by about 12%. So that's a very clear reflection that there is a demand. And also it may not be consistent across the country. It may be high in certain pockets, low in certain others. But yes, of course, at the aggregate level, this is the kind of attraction which we have seen. So I think there is a lot of capacity which is available in the real estate sector. And in certain affordable housing, I would say that there is a significant demand across the country. Yeah. Maybe in the deluxe ones, maybe the demand may not be as strong. But yes, of course, in the affordable, there's definitely demand. So to that extent, I think this sector is offering some kind of a promise going forward.
So can you quantify what this promise means? You said that in the affordable housing segment, you are seeing a significant pickup year on year. Any estimates on what that could mean?
I would say that, we are somewhere around, at State Bank of India, our book size is about 4,75,000 crore. And we expect that we'll see a decent growth in this. And by the end of the year, we'll certainly cross 5 lakh crore in this particular segment. Okay,
that's important to note. Let me also ask you about where you see interest rates headed. Is there room for the Reserve Bank, the MPC, to cut rates further given where inflation is? And if that were to happen, is there room for banks like yours to be able to pass that on any further to customers?
I think we at State Bank of India passed on whatever reductions had already happened in the policy rates. And also when it comes to Reserve Bank of India, the way things are, the inflation print which is seen is somewhere around 7%. I think the stance will continue to be accommodative. They may not be in a position to cut the interest rates in the immediate future. Having said that, I would also like to mention that inflation is essentially what we have seen as, to my mind, is essentially because of the supply constraints and which are actually attributed to the lockdown situation which we have seen in the economy. Once we are in a position to unlock, and once the supply chains are balanced for various corporates, perhaps we may not have such kind of a pressure when it comes to inflation. And maybe that will be a point of time when probably RBI will also look at the interest rate apart from pursuing the accommodative stance which they are doing right now.
Okay, so it's a very clear pause as far as a further cut by the MPC, at least as far as you're concerned, correct?
This is what my reading is.
Okay. Let me ask you about some of the other issues that the economy is facing at this point in time. And I'll ask you that in the context of the impact that we're seeing on the unorganized part of the economy. Again, I ask you this, through your channel checks, your pulse checks. What is the situation on the unorganized side? What's the feedback that you're getting from that?
Well, in the unorganized sector, when it comes to rural economy, I think we see a lot of positive activity there. And we also get to have a sense that even the migrant labor also are returning back to the cities also, because that is something which we get to a sense when we look at the remittance information from the cities to the upcountry location. So those are showing some kind of positive signs. So I think it's all in positive direction, I would say. Maybe it will take some more time for it to come to normalcy, but yes, of course, things are moving in the positive direction.
Okay, so the trend is positive, but it may take a while for normalcy to return. Mr. Khara, we were talking about bank ownership at the start. Let me now ask you about specifically consolidation on the public sector bank side. SBI, of course, has been dealing with the integration of its subsidiaries. You have been at the forefront of that consolidation effort. The government has made it clear that that's the intent in the long term. There isn't a timeline that has been set out at this point in time. But do you believe that the time is right for more consolidation within the public sector banking space?
I think the recent consolidation initiative will lead to a scenario where public sector banks would be very well consolidated. That's what my sense is. But yes, of course, we'll have to perhaps wait and watch for things to really evolve, or really these banks are in a position to address the needs of the economy, because they are now becoming fairly big in terms of size, and it will certainly improve their ability to service the needs of the economy.
So what do you believe should be the driving rationale behind the next leg of consolidation in the public sector banking space?
See, in the public sector banking space, one should have some kind of a critical size in mind. And apart from that, there is a room, and when it comes to, if you look at the Indian banking space also, some banks can be pan-India and some banks can be regional also. So I think the kind of structure which is now currently seen post this consolidation, this will perhaps be the trend. I mean, the banks which are consolidated, they would be almost pan-India banks. The one which are left out, they would be operating in the regional area. And there are adequate and enough opportunities in those areas for these banks to be exploited. So I think in a way, this structure is going to be a very robust and sustainable structure for the economy.
Let me ask you about technology, because through and we can see that right behind you, that has of course been something that you've been working on at State Bank of India for the last few years. But through the COVID-19 pandemic, we've seen an acceleration of the adoption of digital technology. Everyone is now talking about a contactless world, just like post demonetization, everyone was talking about a cashless world. What kind of world do you foresee?
I think every such event, every such major event in the life of the organization and individuals lead to a scenario where there's a definite change in habits. So I would say that post demonetization, the cashless became the change in habit, the UPI code and the QR code that become a reality. Otherwise, it might have taken ages for them to get internalized at the ground level. And post this pandemic, I would say that the contactless virtual meetings have become a reality, and digital space has got occupied by many players, and e-commerce is becoming very strong. So I think part of it will stay, part of it will not go away, so long as it meets the convenience need of the individuals and the customers. All such kind of initiatives will stay. So that is something which I feel that going forward, we have actually seen a rapid increase in the YONO adoption during the COVID phase. And we feel that all those who have come in at this point of time, they have actually tasted and they have got the flavor of the digital. So they will perhaps, considering the fact that it offers a whole lot of convenience, they will stay on. And if I may say that they will not step out from their homes, that also is not going to be a reality. People are actually having developed COVID fatigue also. They would like to step out, and also that will also be seen in the days to come. But yes, of course, both the things will stay. But yes, it's going to be a paradigm shift in the way all of us work, all of us interact and meet socially too.
Yes, it certainly has changed the way that we meet. Look at us, we're engaging online in this virtual meeting. Otherwise, we would have been in Delhi or Bombay at the HT Summit on ground. But Mr. Khara, as you look into the future, and it's hard to predict beyond a couple of months given the volatility that we are seeing, what are the single biggest risks that you're going to be watching out for, as well as the single biggest opportunity that you're going to be focusing on as a bank?
See, as a bank, when it comes to risk, we have to ensure that our asset quality stays protected. So that is something which is on the top of our mind. And when it comes to opportunity, I would say that SME is going to be a new opportunity. Okay. We are looking at it with a whole lot of excitement. We are feeling that if at all we can take care of SMEs at this point of time, it's going to be the next lever for nation building in the days to come. The economy in the past has grown in the service sector. Perhaps now it will grow in the manufacturing sector with the kind of initiatives which are being taken by government, and also with the kind of ecosystem which has got developed, which gives enough insight into the kind of behavior SME is observing, which gives enough insight into the assessment robustness for the banking system. I'm sure it will go a long way in terms of providing credit to SMEs in the days to come.
Do you see the MSME book significantly larger than where it currently is, given the fact that you believe that this is going to be the big opportunity?
Yeah, we look at it.
Leverage on?
Yeah, we look at it with a whole lot of opportunity, because one, of course, the kind of credit guarantee scheme which has been introduced by the government. So it has actually worked as mitigation measures for many of the banks in terms of extending the facilities to SMEs. And now it is for SMEs to ensure that they come forward and also reciprocate the confidence shown by the financial institutions, which I hope will be a reality. And we are aspiring for growing our SME book in the days to come.
Let me ask you a follow-up question on that. You talked about the government credit guarantee scheme. 3 lakh crore rupees was set aside as far as that scheme was concerned. But it's now been extended, and it's now been extended to 26 more sectors. And yet there is more than 1 lakh that is still pending, that's balance, that will now be used up for these 26 sectors. So again, I ask you, does that indicate that there isn't as much pain as we anticipated, or that people are finding it hard to be able to access the scheme?
No, it's not that people are finding it hard. I would say that the scheme is fairly simple. And as I mentioned that, nowadays, these kind of relief measures are not the first resort. They are the last resort. So anybody, any corporate would like to address their needs, first of all, from their own cash flows. And only in the, as a last resort, only they resort to either restructuring or such kind of support. So I think I look at it this way. This is a change in behavior, which is essentially seen at the corporate level.
Okay, so I'll end then by asking you, Mr. Khara, at the start of the pandemic, if the number one fear was what would happen to NPAs and whether NPAs would balloon, where on the fear rating, where do things currently stand today for you?
No, I would say that, when it comes to the retail book and the kind of NPAs which we are seeing, we had a huge concern in terms of it should not go bad. But I would say that it has more or less, it has stayed good. And of course, it always happens that when people lose job, we need to chase them and see to it that our loans are in order. So that always happens. So that is the kind of effort which has been put in. Corporate book, we were, of course, we had a fear like the way even RBI has indicated. But fortunately, till now, things seems to be much under control. We fortunately, fortunately for us, because we were not having much of exposure in the hospitality and those kind of sectors. So that is something which has helped us in navigating the risk to a greater extent. RBI came out with a whole lot of policies in terms of ensuring liquidity. So that has ensured that the markets don't get overexcited. So I think I would say that the steps taken by RBI, the steps taken by Government of India, and also the timely support extended by these two agencies have actually helped us in navigating the difficult situations well.
Well, you believe that we're in a much better place today, both in terms of the macros as well as the micros. And we hope that it will continue. Thank you very much, Mr. Khara, for joining us here at the HT Summit, for taking us through what to make of the state of the economy as well as the road ahead. Appreciate your time. And we wish you the very best of luck as you continue to navigate your way through these uncertain times.
Thank you very much. I really appreciate your time, and also I really enjoyed this event. Thank you.